Hello guys, you're welcome once again to this channel. This is Trader X here, and in this particular video I'm going to basically give you a breakdown, step-by-step breakdown of how I look at every single market using my strategy. If you've been following this channel for some time, I've actually shown you my particular strategy that has an edge of about 75% edge in the market. All right, this particular strategy has an edge of 65%. No, sorry guys, 75%. That was a mistake. 75% win rate. All right, this particular strategy I use has an edge of about what 75% win rate. So in this video I'm basically going to take you step by step into how I look at every single market, how I get my confirmations to enter the trade. All right, so basically if you are new to this channel, I want to encourage you to subscribe to this channel. Welcome guys, subscribe to this particular channel and learn how to become a consistently profitable trader. All right, and if you're a returning subscriber, I want to thank you so much for being part of this family, for how long you've subscribed. I believe you are getting value from everything you are learning here. All right, so let's just get into the video, but please hit the subscribe button. Thank you. Let's get into the video now. Let's get there. So the first thing I look for, this is GBP card. The first thing I look for is what I call the market structure. All right, the market structure. And the market structure, what we are looking at is the direction. All right, is the direction or trend of the market. All right, what I'm looking for is the direction or the trend of this particular market I'm looking at. So what I'm expecting is the market in an uptrend or downtrend. When it's in a downtrend, I look for selling opportunities. All right, then when the market is in an uptrend, all right, the market is in an uptrend, I look for buying opportunities. All right, buying opportunity. So basically I'm going to just take you through how to determine the structure of the market. All right, so that's the first thing you're looking out for. So let's just get to this point. All right, and see, let me use this annotation to show you. For example, you see the market go up. All right, it comes down, goes up again, retest. Sometimes have this, it doesn't break, but it goes up again, retest, goes up again. All right, once you see this, we can see that this particular part of the market is called the higher high. All right, and this is the higher low, higher high, because this particular high, all right, is higher than this high. So this is also a higher low. This particular low here is higher, as you can see, than this low here. All right, then this here have the same height, so it is also a higher high. Are you getting that? Yeah, this is also having the same height at this one. All right, have you seen that? Then it came up and broke this particular higher high. All right, then we form a new higher high here. Are you getting that? Then the price came down and retested this particular higher high here, this structure at this point. All right, so it forms a new higher low at this point. So now looking at this market, we can call it, this is how an uptrend looks like, a series of higher highs and higher lows. And if you zoom out, you see that the market generally is moving to the upside. The market is generally moving to the upside. This is what an uptrend looks like, a series of higher highs and higher lows. All right, so let's move on. Then for a downtrend, all right, you see the market come down, goes up, all right, breaks this particular low and comes here, comes back to retest, breaks low again, comes back to retest, breaks this low again, sometimes comes here, try to consolidate, comes back again. Are you seeing that? So yeah, just focus on these particular points. You see those edges. All right, and please, the market doesn't move in a straight line. All right, the market doesn't move in a straight line like I've drawn. All right, the price can be, moving in some kind of something like this. You see, yeah, it doesn't move in a straight line like I'm saying. Are you seeing that? So yeah, so this point is called the lower low, lower high, lower low. This particular low is lower than this low. Then lower high, this particular high is lower than this high. All right, another lower low. All right, and what are we seeing? The price goes, comes back. When it is coming, it breaks this particular low here, forms a new low here. The price comes, all right, then forms a new lower high at this point, comes back again, break this lower low and forms a new lower low here. So we can now say that, okay, overall the market is moving to the downside. All right, so a downtrend is when the market is forming a series of lower lows and lower highs in the market, a series of what? Lower lows and lower highs in the market. Then we can say this market is in a downtrend. Yeah, there's one more market called the range accumulation or consolidation stage, and that the market is forming a series of highs and lows within a particular range. So you see the market move up, retest this particular low, retest this high, retest this low, try to form something here, goes retest. All right, so the formations you are seeing, all right, is between these particular highs and low. And what are the highs? These are the highest points we've seen on this particular chart you are seeing. Then these are the lowest, all right? So whatever the activity of the price is within these particular highs, all right? These highs and these lows. Then we call it what? A range market. These highs, and these lows. The range market. In this kind of market, whilst in a downtrend, we are looking for a selling opportunity, and in an uptrend, we are looking for buying opportunity. In a range or consolidation market, I try as much as possible to stay out of the market or look for opportunities in other markets. Why? Because really, if you, let's say you enter a buy at this point, well, you could actually make profit there, but because I don't trade against the path of least resistance, all right, I'm looking for a swing high, all right, a swinging market to trade. So I want a bigger move, all right, than these small moves. And sometimes they just form like this, come back again, form like this. So it's very, very uncertain to trade this kind of trend, all right. So that's basically. So let's go back to the chart to identify the market structure of the market we are looking at over here, all right. This is the GBP card. So the first thing you do to identify the market structure on a real chart is to zoom out of the market like this to have a bigger picture. Now, what are we seeing here? So we see the price come all the way down, try to consolidate here, all right, then it comes down, all right, consolidate or rises here. The market is not moving one line, comes here again, breaks this structure, all right, comes the way down again, comes here, comes all the way here. So this is where the price is currently at. So what can we say about this particular market? It comes down, all right, comes down to this point, goes up, breaks this particular low, all right, and forms a new lower low. So you have a first lower low here, forms a lower high here, all right, then breaks this structure, forms a new lower low, comes back again, lower high, all right, then the price tries to break through this high and form something here, all right, then it breaks here again. Then you can see at this point the lower low is formed again, all right, here retesting this particular highs again, the lower high, all right. So generally we can actually say the market is currently in a downtrend. I have a tool you can find on your trading view, even a free version. This tool helps me to see. So after actually determining my trend, I come here to confirm the particular trend of the market, which is a strong sell. So the market is currently in a downtrend, as we can see over here. So in a downtrend, what I'll be looking for is a selling opportunity, except I have a good confirmation to do counter trading, which I don't normally do. All right, once I identify the market structure, which is a downtrend in this particular case, the next thing I'll look for is what we call the area of value, all right, or point of interest. Area of value or what? Point of interest. It is that area or zone where you are looking for a buying or selling opportunity. So in this particular area of value, the thing I focus on is support and resistance, all right? So my support and resistance zone. And note, support and resistance are not lines, they are areas or zones. Are you getting that? I know other people use what? EMA, exponential moving average. Other people also use trend lines to determine their points of interest, but I like to use support and resistance because it's easy. It's very, very easy. So what do I do? Let me show you over here first. Let's show you here. Let's assume, let's assume the price goes up, retest, goes up, retest, goes up. All right, so when the price breaks this particular high here, all right, we know that this high, we leave a line here, then the price, we expect it to retest this particular high and bounce back. Are you getting that? So at this high here, we draw a zone here and we expect the price to reverse, all right, and come on retest. So this particular area on the chart where buying pressure might set in is what we call support. Are you seeing that? The particular area or zone on the chart where buying pressure might set in is what we call the support, and resistance is the opposite of that. A particular area or zone on the chart where selling pressure might set in. So assume this, the price goes up, going up, all right. So if we expect, historically, we draw a line here and we expect the price to come, retest this point and selling pressure setting, then this particular zone up here is where we expect selling pressure to do what? To set in the market, all right. So this is basically support and resistance, all right. That's basically support and resistance here, all right. So let's go back to the chart and draw our support and resistance at this point. So historically, we go back in time to see what happened, all right. So what are we seeing here? Just follow me carefully. You see a rejection here coming all the way here. We see a rejection all the way here. So these are good places to draw my support, all right. So I'll go for, I've told you it's in area or zone, so I'll draw my support from here, but this is a long place, so I'll just put my support at this point, all right, at this point, and I'm using the 4-hour time frame for these things. Then later when I want to enter the trade, I'll now go for the 1-hour time frame, all right. So then you can also see from this point that you have your rejection, all right. So we are seeing that this particular point is also a good place where the price can actually go up, retest, and begin to sell using that. So yeah, so that's a good place to place your how do we call it? It's a good support zone actually. So let's draw another one over here. All right, this is another one here, and it should be tested multiple times. As you can see, tested here, tested here, tested here. All right, tested this point. All right, then we expect the price to actually test from there. Then if you want to add one more, you can actually draw this particular place as your resistance zone. All right, so here we expect selling pressure to set in here or set in here. That is, if the price, come on, they are disturbing me, sorry, the price should come up, it can actually be rejected here and come down. So I'll be on the lookout. Or if the price is able to break this point, I know it will go, come and retest this point, and once support resistance is broken, or it becomes support. So this particular resistance here, once it's broken, it will act as support, and I'll go for a long entry. But if the price fails to break this resistance, then I'll look for a rejection here and go short. So these are all the things you look out for when you are analyzing the market. So once I'm done with this, the next thing I'll look for is my entry trigger, which is what I use candlesticks. I will leave the link to the previous video in this channel where you go and learn about candlesticks and how to use them to trade. All right, so let's go back to the 1 hour time frame. Let's go back to the 1 hour time frame. All right, and on the 1 hour time frame, what do we see? We see that particular support we drew on the 4 hour time frame is a valid support zone in this particular one. So you just adjust it to have multiple touches. So have you seen? See from here, 1 touch, 2 touches, 3rd touch here, 4th touch. So we know that this is a good place to look out for a buy entry, even though the market is in a downtrend. But you know the market has to go up and reverse again. All right, so we expect the market to actually do something like this, to go up, try to retest this point. All right, then maybe come all the way down. All right, before it retest this particular point again, then come all the way down, which is forming a downtrend. I get in that lower low, lower high, lower low, lower high, lower low. Then it begins to maybe go up again. So this is basically my outlook. In this one, I will do a counter trading because I can't wait for the market to go all the way out. So what I would do is to zoom in and find a particular candlestick to enter. At this point, on this support zone, does this look like a hammer candlestick? In the previous video, I explained what a hammer is. All right. For the sake of my chart, the black ones are my selling candles and the blue ones are my buying candle. On the default C trader, Mac trader, MT4, MT5, trading view, the default is red for a downside, all right, candle, then green for a buying candle or a bullish candle. But I've decided to change the colors just to control my emotion, basically. That. So what I'm expecting now is that as the price came here, went up, came here, I expect it to go up at least to this particular point, all right, then retest again, then here a hammer should be formed well, then I'll go up. So you see, trading is purely something like this. Or this particular candle doesn't look like a hammer, but the body is big, but it looks like a hammer. Then we have the green or blue candle here, which is bullish, a sign of bullish entry. So I might as well, you see, when you scroll down, see, let me show you something. Trading is a whole lot of process. See, from this point, this is the least point. Okay, and it broke that. So yes, of course, I think I can basically enter from here, all right, and set my stop loss below this point. Then I know that definitely if I'm doing early entry, the price will come and retest this point, reverse all the way down here again before it begins to buy. All right, so if you want to go for early entry, you can do that, or you can actually wait for the price to do whatever it wants to do, then come to this point, form your hammer or bullish engulfing candle, then begin to long the market. You can also wait for that. So these are two possibilities I will be waiting for on this particular currency pair. All right, so this is basically it. So I'll wait. For me, with my normal trading routine, I will definitely wait for the price to do whatever it waits here, rejects this point, comes down here, all right, forms whatever, the bullish candle, and I will long, and my take profit will be somewhere at this point. All right, so this is what I'll look for. I will not do early entry, even though you can do early entry, but I'll be experience a break even at this point first before the market goes up. All right, so I try to avoid manipulations in the market as much as possible. So this is basically how I analyze the chart. This is basically how I analyze the chart for loss sizes, and the stop loss and take profit to use, is subject to your account size. So just make sure you apply proper risk management to manage this trade well, which is very, very important. All right, so this is my outlook on GBP card. So I'll just wait for the price to go up, retest this point, comes down again, forms a bullish candle here, then I'll go long. All right, I'm not looking to enter the market, even though I can actually decide to enter here, but I'll just wait before I enter. So this is basically my outlook on this particular currency pair, guys. And I've done some few analysis on other pairs, like this is GBP USD, for instance. I have the prices already here, and I'm not looking to enter, and I don't have a confirmation here. Then this is AUD USD. I think I'm in a trade already on AUD USD, and I did an early entry right from this point, right from this particular point. The price went up, like I'm saying. All right, I'll show you that. I could have waited for the price to come here and I'll enter my buy here. What I did is right after this, I noticed this particular candle. You see these 3 candles, it's forming that candlestick pattern called the morning star. All right, so I entered buy over here, and because of this particular high here, resistance here, the price was rejected, came down, was in a loss some few minutes ago, and now the price is reversing up. So I expect the price to go all the way at least to this particular point before the price was suddenly reversed. Are you getting that? So that's an example of an early entry you want to do. So if you go back to what we did, all right, going back to what we did here, like I was showing over there, all right, so I expect the price to definitely go up, reject, come here before I start to buy. So I'm just waiting. Guys, trading is patience. You need to be ready for that, all right? So this is my analysis on my Autocoin GBP card, and I know you learned something new, at least how patient you have to be when you're analyzing the market. All right, guys, leave your comment in the comment section and subscribe to the channel for more videos like this. Put on the notification bell so that anytime I upload a new video, you'll be notified as early as possible. See you guys in the next video. Bye-bye.